So it's 2018, a whole new year for you. It's that time of the year again where everybody's just making their New Year's resolution. Now, for you personally, your New Year's resolution is that this year you want to become a more serious trader, or I should put it, this year you want to become a more profitable trader. Because now you're sick and tired of blowing account after an account like you've been doing all this past year. So this year you're more determined. You said to yourself, this year, this is the keep money season for you. This year, this is the year for you. This year you are making money. So all these years you've heard something called a trading plan. But what the heck? You don't want to hear about no trading plan. You just wanted to get the money. But instead, you've been doing the exact opposite. You've been losing money. So you decided the first step for you in going to the right path of making money is to develop your whole trading plan, because all you heard is that all successful traders must have a trading plan. So for you to become a successful trader, you decide that you gotta have a trading plan. So you make your research, you develop your own trading plan. So now you wake up one morning, 1 February 2018. It's a Monday, positive as ever. You heard that you gotta be positive, so you want to send out positive energy to what? You wake up, you meditate, you go through your usual morning routine. Just pull up your chart, and USD looks promising. Past session just broke down, give us a retracement. Past resistance is becoming a future support, and you know that this is supposed to be a buying opportunity. So now you pull out your trading plan, because now you're more smart. You don't just take any trade. You take a trade that sticks specifically to your rules. So now you pull up your trading plan. Now everything lines up perfectly to your trading plan. But there's only one problem. You just missed the trade by a few pips. Past sessions just came to where you're supposed to have an entry point, and past sessions just started wheeling up. Not really far, but this gave us a really up. Now you hate your trading plan, because now if you didn't have a trading plan, you were just going to press the entry button. Has that ever happened to you? Well, it has happened to me a whole lot of times, and like most traders, whenever that happened, I started chasing the market and I started losing more money. So until I learned a simple trick of going down to the higher time frame, of going down to the lower time frame, where that's not the initial execution time frame, but a simple trick on how you can go down lower, where you're supposed to put your trades in. Just this is where you could get another opportunity to hop on the market. So with that being said, my name is Offense. I'd like to welcome you back to FX Link Sunday Week to Market Preview. And without wasting any more time, let's get straight to the charts. So as we step on our higher time frame, where in our case this is the daily chart, the only thing we want to do is identify the overall direction of the market. So what is the market doing at this point? So is market going up, down, or sideways? And after answering this question, the next thing we want to do is that want to form a bias or decision that if ever we'll be buying, selling, or standing aside. So in this case, it's pretty evident to everyone that price action is in the uptrend. As you can see, this is our lower part of the screen, and price action is going up. So now, if price action is going up, what are we looking to do? Are we looking to buy or sell? You're right, we were looking to buy. But now the next question, after identifying the price action is indeed going in the uptrend and we were looking to buy, the next question would be, where exactly are we planning to buy? So in an uptrend, as price action gives us a sequence of higher highs, higher low, we know that we were looking to buy at the higher low or a pullback, because as soon as price action gives us a higher high, we'll be expecting price to go down to give us a higher low, and right at our higher low, this is where we were looking to buy, expecting price action to go back up, break our recent resistance, and will give us another sequence of a higher high. So now we know that we were looking to buy at a higher low or a pullback. But the next question will be, where exactly are we going to get the pullback? So now in an uptrend, we know that another thing we know is that our past resistance has to become a future support. So the last step for us to do will be to try to identify our past resistance area. So let me give you a second to see if you'll be able to identify the past resistance. Now for me, this is where I see a past resistance area, right at this small consolidation area. If I could try to take this and drag it across right at this area, this is where I expect our past resistance to become a future support. And if you try to zoom in, you can see the price action came from our past resistance, broke up, and now price is now back at our past resistance. So at this point, if price action is back at our past resistance, back at a higher low, this is where I'll be personally looking for a buying opportunity. So as I leave my high time frame, when I form a bias or decision that I'll be looking to buy, and right at this demand area, this is where I'll be looking for my exact entry point. So let's step down to the lower time frame. So as soon as we get on the 4 hours, let me just try and remove this so things can be clear. Okay. So hence what I was trying to emphasize week after week, that after identifying that we were looking to buy, the next thing for us to do is to form a case for entry. Okay, let me try and type it down. We want to form a case for entry. Okay. So now the next step for us will be to form a case for entry. What this means is simple, that we just want to find more confirming beliefs that is this the right trade for us to take. Meaning we don't just want to see price action where past resistance become a future support and immediately place a pending order. No, we want to get more confirmations to see if ever this is the right trade to take. So let me just show you what I'm talking about. If we could take a closer look at this area, you would see the price action just gave us a double bottom. Okay, we just got a double bottom. Let me try to remove this. Okay, price action just gave us a double bottom. And what does a double bottom signal? A reversal. So after identifying the price action is at a demand area, we just got a double bottom indicating a trend reversal, expecting the price action to really back up. And another thing I see is that if I try to take price from this high to this low, and I try to do the same thing on my other side, from this low to this high, you will see the price action just gave us a bullish divergence. Another signal or confirmation that price action will be looking to go bullish at this point. So just getting on our 4 hours, we just got two other confirmations that price action will possibly be going in uptrend. So we just got our double bottom, and after our double bottom, we just got our bullish divergence. So slowly but surely, we developing a case for entry. We're not just looking at one thing and placing a pending order. We want to look at multiple things or multiple reasons for why we'll be taking this trade. So the last thing I see on the 4 hours is that if I could take my fib extension from this X to A, from A back to X as I draw my extension, where do we see our 1414? We could take this 1414, bam, exactly where we get our bottom. This is where we get our 1414 extension. Now 1414 extension is fib ratios where we expect to, where this is our turning points, where this we expect to see price action to get exhausted. Again, just in 4 hours, fib retracement, we give it a point. Just got a double bottom, give it another point. We just gave a bullish divergence, we give it another point. So at this point, I'm pretty confident of taking this buying opportunity. As you can see that we didn't just look at one thing and decide to put a pending order. We look at multiple reasons for entry, and the last thing for us to do will be to step down to our 1 hour, which is our execution time frame, to see exactly how we will plan to get in on this pay. So now on the 1 hour, we can see we just got another double bottom for this week, and right at this point we just got a double bottom. So as this is our execution time frame, as soon as we got a close from this red candle validating our double bottom, as soon as we got this close over here, this is where we were supposed to have our exact entry point. So now you can see that we initially missed our exact entry point. Entry was supposed to be at this area, but now price action just rallied up, and now we've missed our initial entry level. So this is exactly what I was trying to talk about at the beginning of the video, that just after you went through your checklist or your trading plan and everything looks perfect for you to take this trade, but the only thing is that price action you've missed the trade by just a few ticks or candlesticks, if I may put it. So what do you do at this point? Do you just leave the trade and say, no, I've missed it? Or is there another alternative? So luckily for you, there is another alternative, and today I'll be showing it to you. So the next step will be for us to jump to a lower time frame, go way low, as this is the 1 hour, but we'll be going to the 15 minutes. So as you get on the 15 minutes, the first thing I want to do is take my fib retracement from this X to A leg of price action. We'll be looking to retrace from this point, or if it continues to go higher, we'll just have to pull up our fib retracement to where the price action will be looking to retrace. So it's not much of a big deal. So this is where price action is currently at, and this is where I'll be drawing my fib retracement. So I'll look at 3 fib retracement, which is my 382, my 618, and my 786. And at this point I'll be particularly looking for a 618. But if I could try to drag it across, you will see that just between my 382 and my 618, and if I could drag it across, this is where we have a nice zone where price action has been finding significant support. As you can see, but this area price action gave us a support, here another support, now finally get another support. So in this case, right between our 382 and a 618, this is where we will be looking to get a buying opportunity if price action decides to give us a small retracement. So this is where I'm looking for an exact entry point, and if price action does come to give us a retracement, we will be looking at an opportunity that might look something like this. Somewhere at this area, somewhere between our 382 and our 382, stop loss would have to be just a few pips below our lowest low, and stop loss would have to be a few pips below our lowest low, and at this point we are 21, so approximately between 30 pips. This is where I will considering to put my stop loss, and our first take profit would have to go back up to our recent high. So this could be initial trade of risking 30 pips for a take profit of 57 pips. So you were looking at a ratio of 1:86, close to 1:2, not quite there, but for a risk of 30 pips for a total of 47 pips, so just 3 pips away from getting a perfect 1:2 trade. So this is basically what I was looking at this week. I really hope you enjoy. So last thing before I leave, if you like our content and find it very helpful, please hit the like button below, show us the support, share the video with someone else. Last thing, if you really love our content and you don't want to miss any of our weekly market preparations every Sunday, please hit the subscribe button below. Hit the subscribe button below. So for me, see you on the flip side of things. Have a good night and have a profitable trading week. Peace.